we're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Hello and welcome. This is All You Need to Know. I'm Agam Vakil. Let's start by taking a look at the global markets and see how it's been trending. And as you can see, green for the American markets, green for the European markets. But for some reason, we're seeing some amount of weakness when it comes to Asian equities. So there you have it. While Nikkei is trending down by around 0.5%, about a 0.25% cut for something like the Hang Seng 2. And that's had a bearing on the SGX Nifty, which is also trending downwards by as much as 0.2%, currently losing out 23 points. But how is it that our own markets panned out yesterday? And while we did see flattish moves for the benchmark indices like the Nifty, the mid-cap and the small-cap indices did outperform the benchmark indices. The Nifty PSU banking index here stands out, considering a 1% up move there. We also saw some gains in the Nifty IT index, which also advanced by nearly 1%. On the other hand, a lot of weakness in the Nifty Pharma index, largely on account of weakness in Sun Pharma. But let's take a look at your ADRs right now, and we do have gains in Vedanta, Tata Motors, Infosys, and Wipro. On the other hand, some weakness in HDFC Bank and Dr. Reddy's. Not too much to speak for though, on the whole. But foreign institutions bought stock worth 293 odd crores on a net basis. On the other hand, DII sold equity worth around 806 again on a net basis. And in terms of contributors, we did see substantial weakness in Sun Pharma along with Reliance Industries and HDFC Bank bearing down on the indices. What lent support to the index was HUL, which rose as much as 4.5%. Indiabulls Housing Finance and Maruti Suzuki, among others, which also rose in trade. But let's take a look at your futures and options space, and there wasn't too much to speak for when it comes to the Nifty futures. 2% added in open interest, and coming down to the Nifty banking futures, what we saw was 2% decline there. So unwinding coming through for the Nifty banking futures. Let's move on, talk about your open interest distribution, and again, that's where we've seen not too much change, considering 10,500 put with the max OI, 11,000 call with the max OI, so it's a 500-point range. And yesterday we did see a lot of activity around the same mark, around 10,500, 11,000. But moving on, the VIX did come off by as much as 5% now, well below the mark of 19. That could be a positive. But what we've also seen is the Nifty put-call ratio, which remains largely unchanged at around 1.68, and the Nifty banking put-call ratio at around a neutral level of around 1.01. And what we also have is a Kaveri Seed Company, which saw fresh longs. We also saw fresh shorts in something like an Arvind Limited, which saw a 9% increase in open interest, and fresh shorts also seen in several other counters like LIC Housing Finance, where the underlying declined by around 4%. So a whole host of stocks to watch out for, mixed cues coming in. But now let's go across to Kathleen Hayes for the top international headlines.
The World Trade Organization has told Bloomberg that criticism of its performance is justified and the system must be reformed. Director General Roberto Azevedo says the views of critics such as the United States are fair and will be addressed when he meets members of Congress and Treasury Secretary Steven Mnuchin. Azevedo also says it would be a loss all round if the U.S. were to quit the WTO.
The U.S. leaving, I think, would be a loss for everyone. At the same time, including the U.S., but at the same time, I would rather focus on what is actually happening. What is actually happening is that the United States is engaging in the WTO, even in dispute settlement. You know, the U.S. has difficulties with the dispute settlement of the WTO, but in the recent months, the U.S. was the country that brought more cases to the WTO than anybody else.
OPEC is losing Qatar as a member as geopolitics finally ruptures a cartel that has held together for decades through war, sanctions, and price swings. Qatar has been a member of the group since 1961, but will leave next month to focus on gas. The decision comes about 18 months after the Saudi-led diplomatic and economic isolation of the country and indicates Doha believes it can stand on its own. Iran Iran is warning that oil could slump to $40 unless OPEC and its allies impose significant production curbs. Tehran says output needs to be reduced by at least 1.4 million barrels a day to cut oversupply, and fears the cartel may not be able to reach agreement when it meets in Vienna later this week. Iran is a founding member of OPEC and will not participate in cuts while under U.S. sanctions. Japan's Sankei newspaper says Tokyo prosecutors plan to re-arrest former Nissan Motor chairman Carlos Ghosn and representative director Greg Kelly. The paper says the re-arrest will happen on December 10th, meaning the former executives will remain in custody. Sankei says Ghosn is accused of understating his income by around $35 million over the last 3 years. Global News 24 hours a day on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Kathleen Hayes. This is Bloomberg.
It's kind of an embarrassing thing for those of us who spend a lot of time on trade. When you try and do the numbers on the effects of trade policy, they're never as big as you want them to be, right? It's a bad thing to be going protectionist, but it's really hard to get that up to large percentages of GDP. So now there's some part of the problem is that companies have invested in the existing structure of trade. So although if you try and figure out what it'll do in the long run, it's not much. In the short run, it might be disruptive. We're really kind of at sea on this, but the market, I don't know if the market is rationally assessing this. Obviously, people are kind of happy that we aren't having a trade war tomorrow, but I don't know. I think it's probably not as big a deal as people think. If we'd actually broken up NAFTA, that would have been a much bigger deal, but this is not on that scale.
This view that the bilateral trade deficit is not that big of a deal, really, but that the technology transfer and some of the structural issues are fairly important, you hear it a lot. I'm curious, historically speaking, the type of technology transfer that China is accused of, is this a fairly common way that countries have gotten richer over time? Like, how unique is China in its approach?
Oh, everybody does import technology. For one thing, a lot of technology is not the specific patents, or right. It's actually just seeing what can be done, just learning from others, and nothing. Nobody can stop that or should stop that. But China does have a habit of basically violating IP rights, of forcing companies to transfer their technology at bad terms, and this is something really kind of unique. So there's never been a player coming up this fast of this scale before. South Korea was a fast-growing economy once upon a time, but it was not a big player. Japan was a fast-growing economy, but it started at a pretty high level. So this is new.
When you talk about the effects, the economic effects, and how hard it is to read that, I wonder, is there an actual rationale to say that we don't need to resolve this? Maybe this is the new world order where China does its thing and the U.S. does its thing?
No, we built a global trading system, a rules-based global trading system. We did it for a reason, because otherwise it becomes constant uncertainty, constant disruption. It's just we gained a lot, and actually we gained a lot, but even more smaller, weaker countries. The U.S. and China are among the countries that are best able to cope with a trade war, but Bangladesh, the Maldives, these are not countries that, in the midst of a global trade war, they become bystander casualties. And that in turn gets, a lot of the reason we have a global trade order is because we think it's good for peace. And so this is really a bad thing to let this thing break down.
Qatar said yesterday they plan to leave OPEC. They cited technical reasons. They said that they want to focus on natural gas production rather than oil. And to some extent, that's valid. Their oil production is very small. I think they're OPEC's 11th largest producer. They only account for about 2% of the group's production. On the other hand, they're the world's largest liquefied natural gas producer. But I think the backdrop for this, of course, is the dispute, an ongoing dispute between Qatar and Saudi Arabia. Saudi Arabia has led the blockade against the country, and they've tried to isolate them politically in many ways. And the other way to understand this, I think, is Saudi Arabia's and Russia's growing dominance of oil markets. This OPEC Plus group, which is really led by Russian President Vladimir Putin and Saudi Arabia's Crown Prince Mohammed bin Salman, they're kind of running the show, and a lot of these smaller countries within OPEC seem to have a lot less influence on decisions.
Yeah, we just saw them greeting each other like a couple of old friends at the G20 there, and they got a deal as well. So what exactly did they agree to?
Yeah, well, there's very little detail so far, but basically Putin and bin Salman agreed to continue this deal, this agreement to manage global oil markets through sort of this OPEC plus group of countries, which is, which includes OPEC plus Russia. Now, this is the same group that agreed to cut their output by 1.8 million barrels a day from January of 2017, and those cuts lasted about 18 months, and we really saw global markets respond. They essentially cleared a global oil glut in inventories. Prices increased. They sort of culminated, rose to above $80 a barrel in October, the highest in more than 4 years, and those cuts contributed to that. So clearly they know how to manage the market in the way that they want, and they've effectively done that very recently.
Uflex Limited will be in focus after the company's global film manufacturing arm, Flexi Films, has received a U.S. patent for a period of 20 years for its entire range of BOPT films. Now, with this, the company has received the exclusive rights to manufacture these special films in the U.S., Europe, and India. Welspun Enterprises will be in focus as well after the company has entered into an agreement with NHAI for the construction of a 4-laning highway project in Tamil Nadu for a total cost of about 2,000 crore rupees on a hybrid annuity project model. NCC would be in focus after the company came out with an update with respect to their order book situation for the month of November. Now, they have received 2 orders, one for about 174 crore rupees pertaining to its electricals business, and another of about 46 crore rupees for its water business. So in total, some 220 crore rupees worth of orders that the company has received from state government authorities. Also, Omax Autos has approved the setting up of a new manufacturing line for the production of auto parts for a total investment of about 165 crore rupees. Ramki Infra has completed the 100% sale of its stake in Nam Expressways to Cube Highways Singapore. Now, with this, the consolidated debt of the company, which stands at about 2,900 crores, would reduce by about 1,500 crore rupees, so almost a halving of their debt with this move. As well as VST Tillers would be in focus after their November tractor sales fell by about 6.5% on a year-on-year basis, coming in at about 2,736 units.
Okay, Sun Pharma had a conference call yesterday to highlight all the issues that were raised against the company's corporate governance policies by the Macquarie sales note. And the second part was the whistleblower complaint, which the PTI reported about. Now, basically, while majority of the queries were answered, there were in particular 3 things in which there are still queries that are there and could remain overhang on the stock. The first one is the communication on the whistleblower case. Now, PTI reported this. Sun Pharma on its part has said that they have not received any communication or query from SEBI regarding reopening of this case or this alleged whistleblower that has actually come forth and put this 150-page document. So there is no clarity, and brokerages are saying that till the time there is no clarity here, there could be an overhang on the counter. But the company says they don't have anything, and it's difficult to comment on something on a document which it does not have. The second one was the restructuring of Aditya Medisales. Now, what is Aditya Medisales? Aditya Medisales is the related party which it has, via which all its domestic business is routed through. Now, what has been said is that why Macquarie sales note had said that why the business is done via Aditya Medisales. The management says that it was put in as a related party in FY18 and not before that because of a consolidation of shareholding that had happened. However, the management says if investors are uncomfortable with this, they can have options on getting this proper. The options that Dilip Sanghvi suggested was probably buying out Aditya Medisales at cost, or probably Sun Pharma taking over the distribution of the domestic business. But he clarified that in totality, while the sales number is good, the profit margin is as normal as a distribution company. It is just a 0.4 of a net profit margin, so it's a very minuscule part. The only thing that is concerning across brokerages is that a 2,200 crore or close to a $300 million loan was given by Sun Pharma in the annual report. It states to unrelated party. Now, despite several questions being asked to Dilip Sanghvi, he did not disclose to whom this was said. The only thing that he said was that it was given on the pharmaceutical business, someone operating there. He says that he is hopeful that the money will come back. It's given at an arm's length and at market price. So this is one of the concerns. There's no clarity on this and why why this has gone up. So that's something that needs addressing. But apart from it, Dilip Sanghvi managed to answer all the other queries regarding of all the corporate governance allegations that were put on the company.
Well, we've had more clarity with respect to Hindustan Unilever's merger with GSK Consumer Healthcare in India and its consumer business here. Firstly, from what we understand in terms of more clarity is that brands such as Boost, Viva and Mortova will be retained by the merged entity, but Horlicks will be originally be owned by Unilever, for which Hindustan Unilever will pay a royalty of anywhere between 1.75 to 4.25%. For the Horlicks brand. Now, in terms of the merger, we do understand that GSK's acquisition will give HUL scale in the food and refreshment business, and it will also mean that in addition of revenues could take the food and refreshments revenues to around 10,000 crores after the completion of the merger. GSK Consumer is currently the #1 player in the health food drinks category, and at this point in time its penetration is 24% overall, with about 14% penetration in rural markets. So not only do they have a dominating position in the markets, but there is a lot of scope for growth as well going forward. That said, in terms of earnings, it is EPS accretive in day one, and they do see synergy benefits of around 800 to 1,000 basis points going forward. However, in terms of cons, the HFD specialized category is something that HUL has very little expertise in, and it has seen, well, I would say, modest track record when it comes to HUL's venture into the HFD drinks. Also, GSK's 5-year CAGR stands at around little less than 8%, which is less than also HUL's 8%, and its volumes growth is at around 3% CAGR, which is again less than HUL's 5%. In terms of other challenges, its EBITDA margins for GSK have peaked at 24%, which means, and a lot of this is owing to tailwinds that we've seen in raw material costs, and that's of course also coming off. And let's not forget, there will also be an overhang of sizable share sale by GSK and also integration issues among some other challenges that HUL will have to grapple with when it comes to the integration of GSK. But on the whole, analysts are neutral to positive on this merger coming through. And that said, now let's go across to the management, Srinivas Pathak, and what he has to say with respect to the royalty payment going in. And this is what he had to say. Listen in.
The Boost is a brand which is owned by the Consumer India company. Yeah. So to that extent, there is no royalty on Boost. On Horlicks today, depending on the variant, there are range of rates which are in place, ranging from 1.8% going up to 4.5%. We will have to work that through. Yes, in a sense that Unilever will own the brand and we will have to pay a royalty. And we will. Having said that, we also need to work out the SEBI guideline and their implications, which will come through from 1st of April. So there are a few moving pieces which need to be worked through. Yeah. Yes, but Horlicks, there will be a royalty payout.
Well, I think it's a very good deal, and we're very pleased to take equity in Hindustan Unilever. We have said in our press release that we intend to sell down that equity at the right moment. We expect the transaction to complete by the end of 2019, and after that we will decide the right moment to sell our stake, which will be about 5.7% of Hindustan Unilever. It's a very big company, as you know. It's a very liquid company, so that should certainly be possible to do. I'm not going to predict now the timing of when we do that, but we would expect to monetize the stake and return the cash to GSK at the appropriate time.
The Serious Fraud Investigation Office report that was submitted to the NCLT found that the 9 officials that are now being restrained from selling or pledging any of their personal assets were also the key decision makers for the holding company and its subsidiaries. This, according to the report, led to undermining of the interest of the subsidiary companies and associate ventures, which acted only as departments of the holding firm rather than functioning as independent separate entities. The report also alleged that the top officials at the group showed profitable and decorated financials, which hid the depleted financial condition of the holding company, as well as this was done to avoid breach of regulatory ceiling to create leverage on the company's books and also to obtain high credit ratings. The report also found that 46 overseas subsidiaries of the companies could not be located or had ceased to be subsidiaries of IL&FS, for which the court has asked Ministry of Corporate Affairs to submit a detailed affidavit on how these companies had vanished within 15 days from December 3rd.
The government is considering to impose compensation cess of around 12 to 15% on energy drinks that contain caffeine like Red Bull and Monster Energy. Currently, there's no compensation cess that is levied on such drinks, and these energy drinks are classified under the segment of non-alcoholic beverages and attract only a GST of 18%. Now, the proposal is to include energy drinks under the ambit of GST compensation to States Act, and also to increase GST on energy drinks from 18% to 28%. Now, this proposal is being considered to remove the anomaly that cold drinks attract a tax of 40%, that is 28% GST and 12% compensation cess, while energy drinks that contain caffeine are taxed at only 18% despite warnings being issued on their consumption by World Health Organization. Now, this proposal will be considered in the next GST Council meeting, and the amendments to the Act are expected to be tabled along with other budget proposals. This move of increasing GST and also levying compensation cess on energy drinks is expected to fetch around 150 crore rupees to the government.
Several stories available on the website bloombergprint.com. There's also all the live market action that you can catch over the course of the day. But if you look up the website as of now, here are a few stories that you will find. Yes Bank has appointed T.S. Vijayan, who is former chairman of the Insurance Regulatory and Development Authority of India, as an additional director for 5 years with immediate effect. And in international news, there's some confusion about Chinese tariffs on automobiles. Treasury Secretary Stephen Mnuchin said China has agreed to eliminate tariffs on imported automobiles, but declined to give details after President Donald Trump jolted car stocks by announcing a deal had been reached. Trump, in fact, said in a tweet on Sunday that China agreed to reduce and remove tariffs on American-made vehicles, raising more questions about the outcome of his meeting with counterpart Xi Jinping during the Group of 20 meeting in Argentina. It's still unclear whether China will reduce its car tariffs immediately or as a result of a broader deal. In a briefing in Beijing just a few hours after the tweet was sent out, China's Foreign Ministry spokesperson Geng Shuang declined to comment on any car tariff changes. That's all you need to know going into trade today. Up next is Indian Open, and that will take you through market open. So do stay tuned. This is Bloomberg Quint.